Welcome to Profit Insights, where we delve into the ever-changing world of financial markets with your host, Dusty. Today we've got a lot to cover as the financial landscape faces some turbulence. U.S. stock markets have hit bumpy skies recently. Yesterday, the Dow Jones Industrial Average nosedived over 800 points, a fall of 1.9%. The S&P 500 and the Nasdaq didn't fare much better, dropping 1.6% and 1.4%, respectively. This marks a second day of downturns, landing both the Dow and the S&P 500 in the red for 2025. The storm in the markets seems to be stirred by worries over the growing federal deficit due to ambitious tax and spending bills and a notably weak showing at the 20-year Treasury bill auction. Consequently, the 10-year Treasury note yield spiked to 4.60%, highlighting investor anxiety about fiscal sustainability. Even the 30-year Treasury bond wasn't spared, reaching heights unseen since late 2023. Now, let's dive into some corporate happenings that are adding layers to the market's complexity. Starting with Target, whose shares plummeted over 5% after downgrading its revenue expectations for the year. The first quarter net sales fell to $23.8 billion from last year's $24.5 billion. On a brighter note, Lowe's reaffirmed its yearly outlook, nudging the stock prices higher. In contrast, some other companies rode the wave successfully. Now Vertical Group boasted a considerable revenue boost, showing a 23% year-over-year climb. Medtronic delivered strong results for its fiscal year and even announced a dividend hike. However, it wasn't sunshine everywhere, with United Health's shares dragged down nearly 6% due to controversial reports. Turning now to economic indicators, U.S. debt concerns and the potential for a credit rating downgrade add to the cautionary tale shadowing market sentiments. Meanwhile, in the housing market, Fannie Mae has revised down its mortgage rate projections, now expecting them to settle at 6.1% by the end of 2025. Retail sales came with mixed signals too. While Target's outlook wasn't promising, some retail forecasts have managed to keep spirits afloat. On a global pendulum, Asian markets showed resilience early in the week, with India's Sensex and Nifty bouncing back before a subsequent dip driven by broader Asian market softness. Over in Europe, discussions on simplifying the single market and tweaks to GDPR rules are making headlines, contributing yet another layer to the financial ecosystem. Before we close, let's offer some investment insights. Given the current volatility, it's worth considering a diversified portfolio, perhaps leaning towards defensive stocks, which typically fare better in economic slowdowns. Also, keeping an eye on Treasury yields could help navigate investment strategies in uncertain times. Certificate of deposit rates remain competitive, with promising returns, especially in 6-month terms. As always, stay informed, evaluate your strategies, and align your investments wisely with market trends. And that's a wrap for today's Profit Insights. It's been a hefty discussion, but remember, when the dust settles, only the truth remains. Tune in next time for more financial explorations. Until then, stay calm and keep your financial wisdom sharp.